Want to make your money work harder? Enjoy another video with Adam Kahn, the rational investor on stocks, real estate, and crypto. Subscribe now for your weekly dose of investment insights and hopefully learn a thing or two.
Hello, my YouTube friends, and happy Thursday. Sorry for the long delay and that I haven't been posting for a while, but I hadn't had a whole lot to talk about since really focusing my trading account on a few stocks that I really wanted to delve into. I wasn't sure what to talk about because I wasn't researching much further into what's going on or other bargains. Now, today I did have one that popped up on my radar that I've looked at for a while, and it finally got to a price point that I wanted to buy a little of it, so I bought some Target today. But I didn't really want to talk about my trading account so much because also what I started doing is I've been trading micro strategies because I like how volatile it is and it's been a good trade. And it wasn't what I wanted to encourage people on YouTube to potentially delve into as well. Which gives me that opportunity to say, as always, please don't use my channel as financial advice. I'm just sharing what I do in the financial world, and everybody needs to look specifically to them and what fits what they need to do in the financial decisions. So please reach out to your financial advisor. Just use the information here as entertainment purposes only, and all the other things to make sure you guys know I really don't want you following along my lead. Now, what makes more sense is the things like Whirlpool or Target, where I think they're a little less volatile and a bit safer to get into for a long term investment. But again, that depends on your age, your goals, and everything else. What I wanted to do is hyper focus on some things because I'm in a good position where I have that account where I have a set it and forget it, and I really just own those companies and don't pay much attention to them. Since I enjoy trading and I enjoy watching the markets, I then have the account that I'm very active in, and I make trades every day, and I consistently watch what's going on in the economy. What I've loved is seeing all the noise and it sounding real scary, but the market seeming to do just fine, which is what I really hope for. I know that the equities overall can be a little bit overpriced in terms of PE ratios and where they tend to be over the long run, but most of the companies are really projecting continued growth going forward, which I'm really excited for despite the inflation and everything else. Now, keep in mind that stocks are one of the best inflation hedges there are. Because if there's inflation, that means companies like Target are raising their prices to cover for that as we move along and things cost us more, which increases their profits and ability to grow their bottom line. That works across the board for pretty much all companies. So I'm really excited about the markets. Now, real estate, on the other hand, has been really interesting. I was really surprised to see business, at least here in Las Vegas, seem to pick up around the holidays, which is pretty rare because people get distracted by the holidays. But all of a sudden, after the election, when it got busy and then it slowed down a bit, it was like crickets all of a sudden, and it really slowed down. And the interesting thing, because I was talking to one of the people in my office today, that I don't think that has as much to do with interest rates as the news would like to make it sound. Because the people we were talking to 3, 4 weeks ago, I don't think they're paying attention that closely, and they haven't followed up to even ask where the interest rate is now to know that it's gotten worse. I think they've just gotten distracted with life, and typically January is a slow period. Um, I'm interested here in Las Vegas because I think it's possible that because of the fires that happened in California, we actually could see demand here go up because people are going to have to find somewhere to live, whether that means looking in Brentwood or some of the areas surrounding that didn't get impacted, or potentially moving out of the state to somewhere like Las Vegas where they might just need to go for some time, which might drive demand here as well. Now, that's very localized and shouldn't span out to the rest of the country, but I do kind of wonder how it impacts that. And it's interesting because we all have different opinions, and I've been watching some of the laws that the governor wants to put in place. And while they have great intentions, it goes along with my concept of like the government. I think they try to get their hands in things with good intentions, but I don't think they think through the potential repercussions. So I'm going to talk about one real quick, and let me know what you guys think. Do you see it the same way? So he wants to put some sort of anti-gouging law in terms of rebuilding homes and repairs and people coming out to help. The interesting thing is, I have a few things in place. I have somebody who has their contractor's license in California. I have two friends that have built houses over the years, as well as me, who's been involved with some of that. And we've talked about going out to California to help rebuild and potentially be able to earn some money since there's going to be a huge demand on contractors and builders and repairs and everything else. Well, the law they want to put in with the anti-gouging, I don't know how it'll play out, but I don't necessarily see it as gouging. My thought process is if people are leaving their current lives and leaving their family and their homes and their friends to go out of state to help rebuild an area because of a catastrophe, well, to drive that demand, you need to raise the prices to encourage people to go out to do it, to encourage the workers and enough people. Like, you have to pay them better to entice them to actually go 6 hours away and find a place to rent while still maintaining their home somewhere else. I don't necessarily see that as gouging. And when I was talking to my brother about it and kind of, fictitiously making stuff up, I made some comment of like, let's say you randomly ran into Billy Crystal, who lost his home at some coffee shop. He found out that you were in the business of repairing homes and says, "Hey, I'm really anxious. I want to get mine done faster. If I paid you more, could you help me get it built faster?" Does the answer have to be no because of the anti gouging laws and that he has to wait and get in line just like everybody? And maybe the answer is yes, but in a capitalist society, I think people should have the option of doing that. Now, it's an awful situation, and I'm just picking on one of the laws. The anti He was also talking about a no lowball law as well, which I also spin my head trying to understand what that would entail. Because if somebody's buying a property that the house literally burned down and now it's just a piece of land, and they don't know if they're going to be able to get the house rebuilt within 2 years or 5 years or 8 years, and they have to just take that type of risk, at what dollar amount is it a lowball? And is it a low ball if it's not factoring the value of the house and they're just talking about the land? I'm not sure what the goals are. And while there were good intentions, because people lost their homes and you want to support and protect them, it's just by doing so, there are negative repercussions that maybe cause some new issues. What if the person who you can't lowball still has a mortgage and now needs to find another place to live in? And they can't afford to pay both their mortgage and the new rental because it's really expensive to have both while they wait for the house to be rebuilt. If somebody isn't allowed to buy their property, is California simply going to pay their mortgage in the meantime and help them get through it? I mean, maybe they are. They're just so much in debt already. I'm not sure what they're going to do to get through it. And the new laws I just see as causing new issues. Now, for those of you who really love stocks and want to know what I like so much about Target, it's not that I foresee Target being the greatest investment this year or going forward. What I like about Target is it's really secure in terms of their price to earnings ratio in a market where things seem to be a little frothy in price to earnings ratio. It's trading around 15 times earnings, which is really reasonable over their history. They also pay like a 3.5 or 3.6% dividend. And what I like so much, they're only using 47% of their income to be able to pay that dividend, which means it's not really in jeopardy and there's no concern that they won't be able to pay that dividend going forward. So even if there's a slowdown, I picture a scenario where Target could actually raise their dividend if they wanted to. My guess is they're not, because they have things that they think they could invest in to help to grow profits moving forward. Now today it dropped because of something about the holiday sales and what they projected versus what came in. But honestly, to me, a lot of that stuff is noise. If you have to think out 2, 3, 5 years out, is this year's holiday sales really going to be that big a deal on any of the retail companies, or are they going to be able to continue to grow their business? Even if Target isn't able to grow their business and it just sustains, it's priced pretty fairly. And I think that's a great opportunity to be able to get into something pretty secure that can pay a dividend and potentially continue to grow. I also see Boeing back under $170 a share, and that looks pretty attractive to me. I've been able to trade around that position as well, and I bought a little bit yesterday and today. I would have told you guys about Palo Alto Networks that looked really attractive under $170 a share. It's probably a great deal even where it is today because I love them as a company. But I hate telling you about it now when it's already moved up a decent amount and it was a better opportunity when it was in the $160 range. So, but those are the ones I've been eyeballing. Um, I put Target on today when it dropped to around $130. I see it as a great opportunity. I even sold some puts and added on as the stock continued to go higher because I didn't want to not have a position on. I don't know if you saw the video on Whirlpool. That was extremely lucky timing to see the stock price go up as quickly as it did from the time I put the trade on. I really liked it because it was paying such a good dividend yield and similar to Target, although a higher yield. I didn't see it as any huge jeopardy that they won't be able to pay the dividend, even with earnings slowing and some other things that are going on specific to Whirlpool. But in general, I think the market looks great. I love that there's a lot of fear out there. We have the inauguration, I think, on Monday. I imagine not much will change early on, I'm interested to see if Bitcoin will have a really big move one way or the other. It's been bouncing around really crazy between like, I don't know, it got up to 103,000 per token last week. Then it fell down to under 90,000 recently, and it's already back up. Earlier today, it was back above 100,000 again, which is why I've liked the trade in micro strategies to give you an idea of how volatile the stock is. Like, I wish I found it earlier, not because I would say, oh, I would have bought it, but I really do enjoy trading on a smaller scale still. And in the short time, which is about a week that I've been watching MicroStrategies, I watched it go from $325 a share up to above $380 a share down to $303 a share. And the last I looked, I think it closed today around $360 a share. And after hours, I thought I saw it at $365 a share. And that's all in a week and a half of trading. The volatility index on the options is a little above 90%, which makes a lot of what I would call juice in the options. And some of the strategies I do is a mix of I want to sell options. So I sell some super out of the money puts, and I'm amazed how far out of the money I can go on a weekly basis and still get around $1, which is not a ton of money for that expensive a stock, but I don't see a ton of jeopardy of me actually getting called on those options. I then sell some closer options and to get more money out of it. And then I try to be long some stocks so I can be short both calls and puts. There's a lot of risk in it, which is why, again, I don't want to encourage others to do it because the stock goes whatever direction it does. And since you have to be long stock to be short the calls, if it has a big down day, you're going to, of course, lose the money in the stock position. But it just makes it for a lot of fun and it really flies around a bit. And then, of course, the one I'm most interested to see how it plays out is Bitcoin. I don't know how much I've talked about it. I know in my mind, like, I'm a bit of a Bitcoin believer, but I don't want to see people put a whole ton of money in. I'm not Michael Saylor, who I kind of think is a nut job. And the more I listen to him, I worry that he's just a promoter. When I first listened, like, he made a lot of good points, but the more I listen, it's like he's just promoting his position. So there are plenty of really intelligent people I listen to about Bitcoin. And I love the concept of self custody and having an asset that works like money or financial product like that that isn't in the bank, that is in your own control, that if you went on vacation in Japan, it's easy to take along. It would have to come a long way to get to that point. I also like the concept of being able to pay people in other countries or whoever you're doing business with relatively easy because it's just a press of a button and You don't have to worry about an intermediary taking a huge percentage of what you're trying to transact in, because if both people are willing to transact in Bitcoin in this example, but any cryptocurrency for that matter, the fees are really small. When I had a restaurant, I think of credit card fees versus if I was able to accept cryptocurrencies, and the fees that I was paying in credit cards are absurd. And either the restaurant could make more money or potentially the customer could save more or both. It would be the same with transactions of people. Like, there are a lot of people in the US who have family who live in Mexico. Instead of being needing to use Western Union and having to pay those fees, to be able to just zap Solana and pay less than a penny, or Bitcoin, which at this point, like when I first started looking at it, it was rather expensive to do a transaction. Now, most of the time, it's like maybe $1. And then Solana's a penny, and some of the others are even like, it's really interesting to watch how it's progressed over the years. And maybe it never becomes a digital currency. Maybe it's not really a store of value. So that's why, like, I recognize the risk, but if something is going to really take off and be the next thing, I think as much as it's already gone, it still could have a long ways to go. I think about the administration talking about making it part of our reserves, same as we have gold. Well, if we end up buying 1 million tokens, and I understand we already have 200,000, and the country owns 5% plus of the float of Bitcoin, that's a huge position to try to put on, which could drive the price significantly higher. If then other countries see us doing that and want to get on board and compete, well, it's going to drive it even further. What gets interesting to me is one of two things happens in that scenario. Either those who are buying up that many of them just amass too much of it, and in some ways it kind of becomes worthless. Because if you own all of Bitcoin, nobody else cares about it, and who are you going to sell it to? If you own the right amount where you're still able to transact and buy and sell, you can really drive the price higher, because as much as some people think there aren't enough of them, you can extend the decimal point as far as you need to and start talking in terms of Satoshis instead of in terms of Bitcoin. And if they have to create micro Satoshis because it becomes so expensive, the same thing. It just gets to the point where maybe people, like, I was listening to one person that maybe you work a job and you get paid 10 Satoshis an hour, and that's equivalent to whatever that value is, and people just start living in the Satoshi world. Be really interesting. And I see that as a possibility. I was curious. I started researching a little about El Salvador and their ability to transition into it. And the only article I found was a year ago, so maybe it's, changed since then. And it doesn't sound like it's so simple to just use Bitcoin everywhere. The person who went there, they were curious about, is it really like a Bitcoin society? And he gets into the airport, and the first transaction, he said he was pretty excited because, yeah, it was in Bitcoin. He had to get whatever he needed for his passport and to just go through that process when you get somewhere, and they took Bitcoin.